In this video, we're going to be going over the trading concept, liquidity, and how it can be applied to your day-to-day trading. If you're a beginner, make sure to watch this video till the end, as I'll be going over some chart examples and how you can apply this concept. So let's get started. So sell-side liquidity refers to areas in the market where a lot of sell orders are sitting usually below the support level. And buy-side liquidity refers to areas in the market where a lot of buy orders are sitting usually above resistance levels. Now let's get started. So as I can see right here in the market, we have some sell-side liquidity. So I'll mark that out. And what essentially happens is smart money and institutions come and take price out. So people who have stop losses at these lows right here, they will get manipulated and price will take them out, and then later price will just reverse to the upside. And the same thing is with the buy side liquidity. As you guys can see right here, this is our resistance level where a lot of people have their stop orders at, and what institutions and smart money traders do is take out these stop losses and then they reverse price down to the downside. Now I'll be going over some live chart examples. Right guys, we are now on a chart example, and the first example is going to be sell side liquidity. So what we can see on the gold chart is sell side liquidity right here, and it was taken out by this candle. Now if you've not watched my previous video, you need to go ahead and watch it on fair value gaps, because taking it off simply liquidity will not give you a very high win rate. So alongside liquidity being taken out, sell side liquidity being taken out, we can also spot a fair value gap right here, which indicate it is a high probability setup. So where I would take my trade is right here. I'd put a long position down and simply aim for a 1 to 2 risk to reward. So right here, I could easily aim for more and take it out on this candle. So let's see, 1 to 4 trade. Let's see what happens. And as you guys can see, once liquidity was swept, we had a tight stop loss of only 0.1%, and we made a gain of 0.47%, which is the 1 to 4 risk to reward with a simple sell side liquidity concept. Now I'll be moving over to a buy side liquidity example and show you how to do the exact same thing. Right guys, we are now going to be moving over to a buy side liquidity example. So as you guys can see, we'll mark out our buy side right here. So a lot of people would have had their stop losses right here, and as you guys can see, it got taken out, and then we tapped into a fair value gap right here. So what I would do in this case is place a short position, start of the fair value gap, stop loss above these highs, and target a simple 1 to 2. Let's see what happens. And as you guys can see, just like that, we managed to secure a 1 to 2 risk to reward. If we had held our trade, we would have made a 1 to 3. So I hope you enjoyed this video. If you have any questions, leave it down below. And yeah, I'll see you in the next one.